Investor, coming here with you guys on our chapter 3, brokers and tools. Hope you guys are ready. So let's get right into it. Okay, we got free sites all traders must use. I want everyone to be familiar with everything that is listed here. Here I want to give you guys a list of sites that I use on a daily basis, and every trader should use these and or create an account. Okay, number one site out of this, my favorite is Inves. Okay, Finviz.com, great to find plays, has awesome filters to locate certain criterias. I use it to find news. I use it to find the share, the flow, the size of the flow of the company. I look to find, what's a short percentage, all sorts of ideas and information about that particular company or stock you can find out through Finviz.com. Yahoo.com is another great for press releases and market data, right? We like to use Yahoo Finance News to pull up any kind of press releases. We can also pull that up through our Discord ticker info channel, but basically that's getting direct access from the yahoo.com. Okay. Other than that, Twitter obviously is popular for a lot of day traders or any type of traders out there with groups or top trader groups, whatever it may be. You may be following someone that is someone that you like. Someone with a lot of followers could be possible for seeing a stock running on up, right? So if that particular person that you follow mentions about a stock and talks greatly about it, then you could probably bet that these other guys that are following that person are going to see it, and the volume is going to potentially come in, right? OTC markets is also great for SEC filings, and last but not least, Seeking Alpha, great for press releases as well. Okay. Other than that, let's move on. Broker and trading terminology. What is a ticker symbol? Okay, so a ticker symbol is an arrangement of characters representing particular securities listed on an exchange or otherwise traded publicly. When a company issues securities to the public marketplace, it selects an available ticker symbol for its securities that investors and traders use to transact orders. Okay, so every listed security has a unique ticker symbol, facilitating the vast array of trade orders that flow through the financial markets every day. So examples are going to be like Tesla. Okay, Tesla ticker symbol is TSLA. Amazon ticker symbol would be AMZN, and then Twitter ticker symbol would be TWTR, right? You would be typing those ticker symbols to find your trades on a platform or a broker, not the name itself, right? So these ticker symbols will be what you use while trading. Usually this is how you will look up a company using your broker as well. Now, what are commissions? Obviously, we talked about this in our last chapter, but I want to make sure to go through it again. Trade commission is also called a stock trading fee, okay? And this is a brokerage fee that is charged when you buy or sell stocks. Now, lucky for us, most U.S. brokers are all commission free, so it does not cost you guys any money to buy or sell stock, but you have to keep in mind most offshore brokers still charge a buy and sell fee, okay? Popular USA brokers for beginners. We got TD Ameritrade and E-Trade. Now, one of the most commonly asked questions with new trader is literally, what broker should I sign up with? Okay, and here are the two most popular brokers that most beginners and even experienced traders like myself use. I personally like E-Trade. Okay, both are good. TD Ameritrade and E-Trade are both highly used, and they're probably competing brokers out there. Okay, but I personally like E-Trade, so I would probably use TD Ameritrade Thinkorswim and E-Trade's E-Trade Pro. Now, TD Ameritrade and their trading software called Thinkorswim. Here we go. So that's the platform that you guys need to use when you're opening through TD Ameritrade. The good thing about Thinkorswim is that first things first, again, it's commission free. There are no monthly platform fees, which is a bonus plus, right? And then there are amazing charting capabilities, right? It has a lot of complex features that most brokers don't offer. And pre-market and after-hour trading is also allowed, which is a plus. And obviously, you have the option to choose margin or cash account. Okay. However, the downside of TD Ameritrade is that it is bad for shorting, meaning it is very hard to find shares to short. Okay. You're only going to be able to find probably very high float stocks or high market cap stocks. Okay. And then as well as the level 2. Okay. We'll have a lot of complaints about TD Ameritrade Thinkorswim's level 2. It's not that pretty. It's not very good, okay, compared to most other brokerages out there. Let's talk about E-Trade and E-Trade Pro software. Okay, I want everyone, when you apply for E-Trade, you have to apply for the pro version if you want to consider yourself a trader. Okay, so it's also commission-free trading. It wasn't like that always, but recently, as the competition gets stronger within among these brokers, they're gonna be making it free now. Amazing charting capabilities. I personally like the way E-Trade Pro has this way lay it out with charts. It's level 2. Everything just looks so beautiful, simple. I love simple. Simple works, and I think it's very easier to use for most beginners and most people. Okay. Also offers margin and cash accounts. Great entry level shorting. Pretty nice broker for you to get started to get better shorting than TD Ameritrade, and it has amazing level 2. Okay, it's pretty. It's just easy to read. Everything's a plus about E-Trade Pro on this end. All right, so popular mobile brokers. We got Webull and Robinhood. With everyone being on the go these days, some people can't sit in front of a computer every day. And that's where these brokers come in, right? The two most popular mobile brokers right now currently are Webull and Robinhood. So Webull and Robinhood are very, very similar. We personally like and use Webull, but both brokers are commission free, no monthly software fee, offer pre-market and after-hour trading, comparable to Thinkorswim for shorting, and offer level 2 if desired. So again, this is more for people that really can't get on trading on their laptops or their desktops. So phone, I prefer Webull. Okay, Weebulls are newer platform that I recommend for especially mobile on-go traders. We also partner up with Webull, so when you sign up with them, you get a free stock just by registering, and then also when you deposit more than $100, you would get another free stock. That is current promotion. It could change in the future. Okay. Other than that, Robinhood, I can't really recommend anymore as much because Robinhood, I hear stories, and there's been a lot of cases where the broker just freezes during the middle of trades, right? So if you're in a stock and you're about to sell the stock and the broker just freezes, the circuit goes out, the power goes out, or whatever, then what's gonna happen? You're gonna not be able to sell that stock, and if the stock crashes, you're gonna be losing money, right? So something that you need to think about. Great offshore brokers. Let's talk about some offshore brokers. When getting into trading and finding your desired broker that you think will work best for you, another consideration for most day traders is looking into great offshore brokers. Okay, how can I bypass the frustrating PET rule? Right, we talked about the pattern day trading rule on our last chapter, and this can be done by using an offshore broker. So let's get a little bit into it. Our most recommended, most popular current offshore account that USA citizens are allowed to use is cmelightgroup.com. Okay, so first things first, DAS or Sterling Pro software, that is just a layout, the way the software. There's two types of software that you can use, the DAS or Sterling Pro. Both are good. It just all depends on the user, right? Whether you like that particular layout better or the other. It's not commission free. So most offshore brokers, in fact, I think all offshore brokers are gonna have to include a fee. So you're gonna not see commission free on these offshore brokerages. You're gonna have monthly software and market data fee. Okay, so that's the only downside of it. Okay, really, because I mean the great side is that there's no PAT rule, meaning you can day trade as much as you want. The cash settles right away immediately. So you can just buy and sell, buy and sell, buy and sell as much as you want without having to have that worry on the PT side. So the thing is the fee and the monthly software. Go to their website and check their fees. It's also great for shorting. Most offshore brokers offer just absolutely amazing shorting. Okay, so meaning you can go ahead and borrow shares to short on pretty much any stock out there. Also has great charting, great level 2. You can't really go wrong with CMElightgroup.com. DAS or Sterling Pro, those are for professionals. So this is, you're gonna get the best of the best. Okay, account minimum is required, I believe, is like $500, but double check on the website, and that's about it. TradeZero.co is another offshore broker that I recommend. However, you cannot sign up with a USA address. So people that live in the US, you're a US resident or citizen, but you have, let's say, a business outside of the United States, you have an address or you had your old address that you used to live in that is still obviously currently active or whatever, maybe you have a house or something, then you can use that to open up this TradeZero.co brokerage account. Okay, and that way you can get away with the PET rule. However, once again, it's not commission free. With most of these offshores, it's kind of give and take. What they give you is the no PTT rule. However, you pay a commission fee for every trade. I think it's like 0.005 a share, right? So if you traded 10,000 shares for that day, they're gonna charge you $50, right? So if you trade less shares, then it's not gonna really matter. But there's that commission fee. And then we got the monthly software market data fee. There's going to be, I think, 3 different platforms. The zero free version, which is kind of just a web version. You don't have to pay any data fees on that. But I do recommend using the pro version, which is their best version, TradeZero Pro. I think you have to pay just a little bit of a fee monthly. Just double check with their website. It's also great for shorting. Never had any issues trying to find shares to borrow from them to short a stock. Overall chart's pretty good. Great level 2. Account minimum required, I believe, is $500. So other than that, both of these offshore brokers are what I recommend. Determining the price of a stock. What is the bid/ask? Okay, so the bid and ask prices are stock market terms representing the supply and demand for a stock. Okay, so the bid price represents the highest price an investor or trader is willing to pay for a share. Okay, and the ask price represents the lowest price at which a shareholder is willing to part with shares, right? Meaning they're trying to sell. So the difference between the bid and ask prices is called the spread, okay? So let's say if a stock is trading at $7 on the bid and the ask is sitting at $7.10, what is the spread of that stock? The bid is at $7, the ask is at $7.10. The spread is the difference between the bid and the ask, so therefore the spread is 10 cents, right? So if a stock quote features a single price, it is the most recent sale price. Just keep that in mind. So to put it simple, the bid are the buyers and the ask are the sellers. How to buy and sell stock and most common order types. Okay, so let's talk about this real quick. Each broker, whatever broker you use, has little changes on how you issue a buy and sell order. But for the most part, the broker's order windows are pretty similar. Okay, so in this picture right here, this is an E-Trade Pro order entry. Okay, and here we got 3 basic types of orders. Okay, we got limit, market, and stop limit. So for example, let's say we want to buy a stock that's currently trading at $4, but we want to buy the stock at $3.50. So we want to buy the stock at lower price than its currently trading price. Let's say the stock, REXN right here in the picture shows a price of $4, or the bid at $3.85 and the ask at $3.90. I want to buy, okay, at $3.50. So what would I do? Okay, I would go ahead and type in the quantity, the number of shares that you're willing to go buy that stock, and put a limit order and type in on the price $3.50. The term on the day, just leave it on the day, destination on the auto, and you go ahead and click buy. What's going to happen is when the stock price does come down to $3.50, the broker is going to automatically trigger for the buy, and you're going to get that number of shares that you wanted to buy for $3.50. So let's say you want to buy 5,000 shares at $3.50. You put a limit order price at $3.50, click buy, stock price drops to $3.50, automatically triggers, and now you have 5,000 shares that was bought at $3.50. Okay. Market orders. When you're trying to buy a stock, all you gotta do is just click price type market, and then boom, whatever the bid or the ask, probably you're gonna be buying it at the ask, right? Whatever the stock current market price is at, you're gonna go just buy at that market. Immediate, quick execution, and that is about 80% of the traders what they use. 80% of traders like to use just market. Okay, market buy, market sell, nice and easy, just one click of a button, right? So, it's good for day traders and scalpers. Basic buy orders, another one would be stop limit. So, for example, if you're trying to, let's say, buy a stock that is higher than its current trading price, why would you do that? For example, you want to buy the stock breaking the resistance, right? So, let's say the stock REXN is trading at $4, and you see that the stock chart has a resistance at $4.10. So you want to make sure that you want to buy that stock when the stock resistance breaks, meaning, about 1 or 2 cents, right? Anything that's above 1 or 2 cents is usually telling the sign that the stock resistance is breaking, right? So what we do here in this case is we put a stop limit order, right? Put the quantity of the number of shares that you want to buy, say 5,000 shares, and put the price type stop limit, and you put the price at 411 or 412. Like 1 or 2 cents above that resistance to make sure that the resistance did break and that the broker automatically triggers when that number hits. Does that make sense? So that way you are in as the resistance breaks, other buyers buy into it because they see that the resistance breaks and now we have more room to run, and more buyers come in and the stock price goes and runs, right? Now on the sell side, it's the same thing. So let's say you bought REXN at $4 and you want to sell at $4.25. You'll go ahead and click the limit, boom, and sell it at $4.25. One thing I want to say about this limit order is that when you're trying to buy a stock at the break of resistance, do not use limit orders when you're trying to buy a stock that's currently higher. Okay, so what I'm trying to say is, let's say you're trying to buy a stock at $4.10 break, but the stock is currently trading at $4, and you put a limit order in for $4.11. What's going to happen is when you click that buy button, you're going to automatically get filled at the current market price, which is at $4, let's say, right? If the stock was trading at $4 and you use limit order and put $4.11, it's just going to automatically get you bought in at that current price of $4. Does that make sense? So you only use limit orders when you're trying to buy a stock that is currently trading. You want to buy you want to use a limit order when the stock price is lower than the current market price. Okay, does that make sense? So pretty simple. Just keep that in mind. And then for sell orders market, you can still use stop limits when you're trying to sell. For example, it's basically, how much are you willing to risk, right? So let's say you get in at the stock price on REXN at $4, right? You bought at $4 now, and your target is $4.25, right? So what happens in case the stock doesn't hit $4.25? Let's say you don't get the reward, right? You want to get the 25-cent reward from 4 to 4.25, but what's the risk side? How much are you willing to risk? So the stop limit is a feature where you can go ahead and type in the number at a lower price than you bought in at, right? So that you get out at that price or the current price. So for example, you put a stop limit for $3.90. You got it at $4, your target is for 25, you're looking to make 25 cents and you're looking to risk 10 cents for that 25 cents. Does that make sense? So you put a stop limit to make sure that you're not gonna lose more than 10 cents or lower than $3.90. So you're automatically, when you put stop limit order for $3.90, and let's say the stock is currently trading at $4, well, when the $4 comes down to $3.90, you're gonna get stopped out, meaning you're gonna go ahead and take the small loss and you gotta move on, right? Instead of, let's say you didn't have a stop limit and the stock price somehow tanks 15, 20% or 50 cents, you're at a greater loss. So it's kind of like an insurance, like a protection plan, okay? So that's about it, guys. Well, thanks for tuning in. Looking forward to seeing you guys on our chapter 4.